The Pareto Principle, also known as the 80/20 rule, is one of the most misunderstood ideas in money and success. Most people have heard of it, very few actually understand it. At its core, the Pareto Principle states that roughly 80% of results come from 20% of efforts. This pattern appears everywhere. In business, a small percentage of customers often generate most of the revenue. In productivity, a small number of tasks create most of the outcomes. In wealth, a minority of decisions usually shape the majority of financial results. But this rule is not a guarantee. It's not a law of nature, and it's definitely not a shortcut. It's an observation. The mistake people make is treating the Pareto Principle like a formula for easy success. They hear 80/20 and assume less work, more money. That's not what it means. The Pareto Principle doesn't eliminate effort. It reveals where effort actually matters. Most of what we do every day produces very little impact, not because we're lazy, but because we're unfocused. We spread our time, energy, and money across too many things. And when everything feels important, nothing truly is. Pareto helps explain why progress often feels slow despite being busy. You're active, but not effective. This principle doesn't say only do 20% of the work. It says that a small part of your actions drives most of your results, whether you realize it or not. And that's where awareness becomes powerful. When you understand Pareto, you stop asking, how can I do more? And start asking, what actually matters? In finance, this shift is critical. Most people focus on the wrong variable. They obsess over small savings while ignoring big leaks. They chase complex strategies instead of fixing simple behaviors. The Pareto Principle helps you see imbalance clearly, where your money comes from, where it goes, what actually moves the needle. It doesn't promise wealth. It promises clarity. And clarity is dangerous because once you see what truly matters, you can't unsee it. This principle has nothing to do with luck or privilege. It has everything to do with attention. Where you place your focus determines your results, always. Understanding Pareto is not about working less. It's about working deliberately. Before trying to use it to build wealth, you need to respect what it really is, a lens to analyze reality, not a trick to escape it. Once you understand that, you're ready to move forward. Understanding the Pareto Principle is one thing. Using it correctly is another. This is where many people go wrong. They hear 80/20 and assume it means doing less and earning more automatically. In reality, it means being honest about what actually creates value. Using the Pareto Principle to build wealth doesn't start with money. It starts with awareness. You look at your life, your work, and your finances, and you ask uncomfortable questions. Which activities actually generate income? Which ones only consume time? Which expenses improve your future? Which ones only maintain comfort? Most people don't want to ask these questions because the answers force change. Pareto doesn't tell you to stop working. It tells you to stop wasting effort on low-impact actions. In terms of income, a small number of skills usually create most of your earning potential. Not all skills are equal. Learning everything is inefficient. Mastering what pays is strategic. Using Pareto means identifying the few skills that the market actually rewards and investing your time there, not chasing trends, not spreading yourself thin. In terms of spending, Pareto reveals that a small number of expenses usually create most of the financial stress. Not every purchase matters, but some habits matter a lot. Cutting random costs won't make you wealthy, but fixing the biggest leaks can change your entire financial situation. This is where Pareto becomes practical. It helps you focus on the few decisions that have long-term consequences: career direction, savings rate, investment consistency, lifestyle inflation. Wealth isn't built by optimizing everything. It's built by optimizing the right things. Another mistake people make is trying to use Pareto to justify shortcuts, looking for the fastest path instead of the most sustainable one. The principle doesn't reward impatience. It rewards focus. Pareto doesn't say success is easy. It says success is uneven. A small number of actions matter more than the rest, but those actions usually require discipline, repetition, and time. Using Pareto for enrichment means concentrating your effort where it compounds. In skills that scale, in habits that persist, in investments that grow slowly but consistently. There is no escape from work. There is no escape from time. Pareto simply helps you choose where to place your effort so that it isn't wasted. If you're looking for a trick, this won't work. If you're looking for clarity, it will change everything. Understanding what not to focus on is just as important as knowing what to focus on. And once you see that, your decisions become simpler, but never easier. To make the Pareto Principle real, we need to bring it down to everyday decisions, not theories, not motivation, real life. Let's start with income. For many people, most of their income comes from one source, one job, one skill, one role. Yet they often spend their energy scattered across side projects that go nowhere, courses they never finish, or opportunities that don't align with their main strength. Using Pareto here means identifying the one or two skills that generate most of your income and doubling down on them. That could mean becoming excellent at a specific role instead of average at many. Negotiating pay instead of chasing a second job. Improving performance where you already create value. Small focus, large impact. Now, let's look at spending. Most people don't overspend everywhere. They overspend in a few areas. It might be food delivery, lifestyle upgrades, subscriptions they rarely use, a car payment that's too heavy. Pareto helps you spot the few expenses that cause most of the pressure. You don't need extreme frugality. You need awareness. Fixing one or two major leaks often frees more money than cutting dozens of small pleasures. Next, investing. For long-term investors, returns usually come from consistency, not complexity. A small number of decisions matter. Starting early, investing regularly, and staying invested. Most portfolios don't fail because of bad assets. They fail because of bad behavior. Using Pareto in investing means focusing on the habits that actually drive results, not checking prices daily, not chasing trends, not overreacting to noise. Time and discipline do most of the work. Finally, let's talk about time. Most progress in life comes from a few repeated actions done over years. Reading occasionally won't change your trajectory. Learning consistently will. Saving randomly won't build wealth. Saving automatically will. Working hard sometimes won't change your situation. Working strategically over time will. This is Pareto in action. Not as a hack, but as a filter. It helps you remove distraction, not effort. It helps you simplify decisions, not avoid responsibility. The people who quietly build wealth aren't doing everything. They're doing the right few things over and over again. That's the real power of the Pareto Principle. Not making things easy, but making them clear. And clarity, applied consistently, changes everything. The Pareto Principle doesn't promise success. It doesn't guarantee wealth, and it doesn't remove effort. What it offers is perspective. It reminds you that progress is rarely about doing more, it's about doing what matters consistently. You don't need to optimize your entire life. You need to identify the few decisions that shape your future and take them seriously. Wealth isn't built through intensity. It's built through focus, patience, and repetition. Most people stay busy chasing small wins while ignoring the actions that truly compound over time. The goal isn't perfection. The goal is alignment. When your time, your money, and your energy are directed toward what actually creates value, progress becomes inevitable, even if it's slow. And slow progress, sustained long enough, becomes something most people never reach. If this video helped you see your finances differently, take a moment to reflect before moving on. Like the video if it brought clarity. Subscribe if you want more content focused on long-term thinking, personal finance, and building wealth without hype. And share it with someone who's working hard but might be focused on the wrong things. Clarity is rare. Use it wisely.